Hey everyone, Zishan here from Royal LePage Signature, and this is the Market Minute for November 2023. In this video, we're going to do a comparison of sales, listings, months of inventory, and price across the GTA, Toronto, and York region. Let's jump right into these numbers. In the GTA, we saw sales decline. We went from 4,544 in November 2022 to 4,236. So about a 7% decline in sales year over year across the GTA. In Toronto, it was close to an 11% decline. We went from about 1,800 sales to about 1,600 sales. And in York region, we saw a smaller decline of about 5%, from 832 sales to 794. Now year over year, it doesn't look like a massive change on either side, but what I can tell you is that when we zoom out, we're 36% below the 20-year average for sales in the GTA. So we're way off where we normally are or where we have been for the last 20 years. With respect to our listings in the GTA, listings are up 40% year over year. Last year we had about 12,000 listings, and this year we had just under 17,000 listings. In Toronto, much of the same. We saw a 41% increase in listings or in supply. We went from just over 4,900 to just under 7,000 units available for sale. And in York region, 47% increase year over year. We went from 2,000 to just under 3,000. Now, these numbers, again, they look quite big, or these deltas look quite large, but in the grand scheme of things, we're not too far off where we are for the 20-year average. What's interesting is, though, that month over month, the supply shrunk, which was strange because we had been kind of doing an upward trend on listings for the last few months. But going from October to November, we saw a pullback. We went from about 19,000 listings in the GTA to, again, about 16,000, 17,000. So we did see the supply shore up just a little bit. And what that did to the months of inventory is that it shrunk. So last month, we were over 4 months across the board. Right now in the GTA, we're just under 4 months at 3.96. In Toronto, it's flat month over month, but obviously up year over year. We're at 4.35 months of inventory, and in York region, we're at 3.73. Again, year over year, we're way up, but month over month, we actually came down. And what this tells me is that the market is starting to settle. It's starting to find its footing. When we look at the prices, you'll sort of see the same month over month and year over year. In November 2023, prices were flat, a 0.26% increase year over year, which is negligible. In Toronto, we saw a 0.04 increase in price year over year, and in York region, we saw a dip of just under 2%. And even if you look month to month, you can see the dots kind of bouncing around, not going too far, not going too up, not going too high, not going too low. And this sort of gives me an indicator that we're sort of flattening out, and we should kind of bubble along for the next few months. What I do think will happen is a trigger at some point will occur. And there are a couple of things that could affect our real estate market in 2024. So primarily the interest rates, if they start to come down, it's predicted they're going to come down in Q2 or Q3 of 2024. Another impact, or something that could impact our market, is the mortgage renewals. All of the big banks have a lot of mortgage renewals coming up in 2024. And depending on how these are handled, or the changes from where these mortgage rates are now to the new renewal rates, that could cause an effect in our market. And lastly, the employment rate. It's been stable so far, but predictions are that things could get a little tough in the employment market in 2024. So these three factors will have a major impact on our market in 2024. If all things remains equal, we should be stable. But if any of these factors sort of go one way or the other, they will impact the GTA real estate market in 2024. Thank you so much for taking the time to watch this video. If you have any questions, please don't hesitate to reach out. Have a great day.